The price of your altcoins greatly depend on whether or not this Ethereum and Bitcoin weekend rally can sustain itself. So this is going to sound corny, but I'm going to get artsy with the chartsy and show you a creative way to determine if this rally is going to sustain itself or if the price of your altcoins are going to dive right back down into the abyss once the weekend dust settles. Let's dive in. Let's stare at Ethereum versus Bitcoin. Ethereum looks like it's in a potential breakout formation out of this box, right? So I'm alluding to this specifically because during a VIP call, I thought that because Ethereum was responsible for pulling Bitcoin down and out of a bullish formation, right, per my plan B video, where I essentially made, so this was a bullish formation essentially right here under a horizontal that was hard to break out. I said, this is going to break down because Ethereum's going to pull it down. That was the plan B video. A lot of people thought I was crazy. That's when everybody was bullish. All crypto YouTubers said continuation, continuation. So if you didn't watch that video, you might want to watch that one first so you can see me anticipate from the past, anticipating the future. And Ethereum literally did exactly what I said it was going to do. But because it pulled it down in that VIP call, I thought Bitcoin was going to have to pull it back up, but it looks like Ethereum's going to pull Bitcoin back up, oddly enough. So Ethereum is acting like a primary indicator for Bitcoin, both pulling it down and pulling it back up. So if you want to see me see into the future before all this happened and tell you why it was happening before it ever did, click this link here. That's essentially my plan B thumbnail. Go ahead and click that, then come back to this video. All right. So we are going to stare at, so right now I'm going to take price off, or we're going to use the 4-hour chart today. So you can see how low this yellow line got below the orange line on Bitcoin. The orange line is the 4-hour 200 EMA. The yellow line is the 21 EMA on the 4-hour chart. So look at the rough distance there. Now let's go to Ethereum versus, so this is versus the dollar, and we're going to see how far down this got pulled. And you can see not only did that yellow line not go so far below, but it's already curled back up and getting ready to cross, right? So because the yellow line went and price is above here now. So take a look at where price is above the cross of this, and on Bitcoin, it is still below. Do you see that? So this means that Ethereum right now is making gains on Bitcoin, which is not what I expected to happen after the dip. And I did have a VIP say, I think Ethereum's going to pull it back up. And here's why. I was like, man, I don't think that's going to happen. But that VIP was absolutely correct. And I did not see that coming. But regardless, there are some interesting things to look out for that I'm getting ready to show you to determine if this is going to head back down. Because Bitcoin, what it could do is it could pull down Ethereum. So let's take a look at a few things. Let's go ahead and take a look at Ethereum since it's leading up. All right, so I'm going to take off price here, and let's look at all the times that the yellow just skim played. So this is a bearish cross. You got some form of continuation once the cross happened. So that's a bearish cross. If yellow goes below orange, bad. If yellow goes above orange, good, right? Sometimes when the yellow goes just below the orange and turns back up, I call that a skim play. So let's go take a look at some of these skim plays. So this technically was a skim play that ended up failing, right? Which is what could happen here. The same type of formation could happen. The yellow could go like this, then come back down, then get your continuation. You need to be on the watch out for that. So this was not a skim play. It's a straight up bearish cross. You got a ton of continuation out of that. I'm looking for more skim plays like this. This is a deep skim play. This is a skim play here. And just so you can see how this kind of works. And sometimes it just starts wiggling around the line and you get consolidation around these two EMAs as they sort themselves out. So you have three general options, right? On a skim play that ends up breaking back down like so. So it skims, comes above, then goes back below for continuation to the downside. You have skim plays that continue upward and onward, right? So there are three essentially options here, similar to my Plan V video where I said, hey, there are only two options and neither of them are up. Therefore, 98K November is not going to happen. It's like, I mean, not impossible, but it's extremely low risk because it's not really a valid option. Continuation to the upside or consolidation around. So you get like a squiggly. So it just sorts itself out and consolidates roughly on these lines where price goes back and forth around these two EMAs, right? So those are the things to look out for. However, one way to know whether or not a bullish scenario is going to happen is what I'm getting ready to show you on the chart. So I'm going to show you a fairly creative way. Okay, so stay tuned for this because you can use this on other time frames on your altcoins. It's going to be really valuable information using RSI and stochastics to gauge the strength of a move up, right? So before we go do that, flip your phones or get flipped off. So that means specifically flip your phone, hit the like button so I can continue making solid videos for you. And also what's going to help me out even more, if you leave me a quick comment, even if it's a simple period without the tampon, or you yell your favorite type of food like tacos, whatever you want to do, or your favorite coin veracity, come on here and let me know what coins you're following the most, your best moonshot bag. And if you are new, go ahead and hit subscribe, hit that bell. Here's why you should hit the bell. It's time sensitive information. We're having a weekend rally, right? So if that bell is going to help me help you walk through a more profitable crypto journey. We're in this together. Hit that bell. All right, let's continue. Oh yeah, I have an Ethereum background today. Kind of like it. All right, so here's what you're looking out for. There are lots of ways to do this. You can use horizontals, you know, but I want to show you an artsy fartsy way. Okay, so here we go. So I'm going to put these back on. Actually, I will keep price back off actually. So typically when you get continuation to the upside in whatever form, what happens is one of two things. Option one is that the 4-hour RSI gets into the bullish control zone. So I'm going to maximize, I'm going to circle. So where this is, I'm going to circle right here. It doesn't have to stay in there, but I'm going to show you what I'm talking about here in just a second. Got continuation to the upside. I'm going to circle down here. Continuation to the upside. I'm going to circle right here. All right. Now, so you know that all the things circled on this RSI chart, it got continuation. So what you can see is even when you had a little continuation, the 4-hour RSI just peaked its head in, didn't sustain it, but that was enough to keep continuation to the upside. Here, it got deep into the bull. So you see how there's a dotted green line here and it turns greener. I apologize. It's kind of hard to see because my background's a little green as well. And there's a dotted red line. This is the bearish control zone. So if RSI could simply even peek its head, that greatly increases the chance that there will be continuation to the upside with this 4-hour EMA skim play, right? The deeper into the green, the better likelihood that you're going to have that the move will keep going up and it's not going to break back down. So you can see here where I circled, it barely got its head in, right? So the green squiggly line barely got into this green zone here, right? See how this is all a green zone? It barely got it, but it was enough to do it. So let's go to an area. Let's go to the time where it broke down. And this is only option one, right? There are a couple ways this plays out. So let's go to the time where it broke down. Let's go ahead and find that. Where was that play? Right here. So you essentially had a skim play that didn't last, and I'm going to circle this area here. Now I'm going to maximize it. So you can see here that when that happened, that skim play, so the skim play happened on price, and then price tried to get continuation. Did it make it to that dotted green line? It did not. And it broke down. So that is one artsy fartsy way, you know, a non, you know, traditional way to look at things, but it really is just another tool of confirmation to determine if this is going to keep going up, right? So that is one of two ways. And I guess we can do a couple more reiterations where, let's see here. Are there any more? Oh yeah. We'll go to this. So I'm going to circle where it broke. Actually, I will put like a box where it broke out and a box where it broke out versus I'm going to circle when it tried and circle the RSI related. And let's look at the difference. So the squarish looking squiggle here is when it did break out, and we're going to look at the difference. Where I made a circle, did the RSI touch the green? It did not. Where I made a square, did RSI peek its head into over this dotted line? It did. Do you see that? So I mean, honestly, this has an insane hit rate, folks. All right. I don't see anybody else using it like this. And, you know, maybe people do, maybe this is like, you know, common knowledge or whatever, but I think it's, you know, a very uncommon way to view the chart. So that's why I started off with a corny statement, artsy fartsy, but it doesn't matter. So remember, on my channel, I often say, you know, I use these these are my primary indicators, right? So weekly candlesticks and daily candlesticks, RSI, and EMAs are my primary indicators, and stochastics is like my top-notch secondary indicator, right? Or like a bottom tier but primary indicator. It's one of my primary indicators, probably, right? So if your brain works better with looking at MACD, you don't have to use what I use. You can make your own style. You see what I'm saying? So here, what I'm doing is I've created my own style on simply viewing statistical probabilities of if this happens, then statistical probability. I found this in the chart. Maybe other people use it too. I don't know. It doesn't matter what it is. It could literally be, you know, how you see out there moon cycles. But as long as a moon cycle gives you statistical probabilities, you don't have to like it. You don't have to like what gives you a probability. If it gives you an edge, you can use it, period, right? It's just a question of which things give you the best edges. That's all that matters. It doesn't matter if, you know, you wake up one day and your grass is brown, right? And that means buy Bitcoin, and because it's got a 98 out of 100 hit rate. Whenever you wake up and the grass is brown, that's your buy. It doesn't matter if it's something as stupid as that. It only matters that it has a good statistical rate of playing out. Does that make sense? All right. So as weird as this kind of strategy is, it has an extremely high hit rate. And, you know, out of all the reiterations I showed you, there were no exceptions. Are there exceptions? Absolutely. I could go back, but it might take, you know, like a year of price history to find the first exception. So this is an interesting way to use it. So since Ethereum, I feel, is leading up at this time, it might be wise simply to use the Ethereum chart to, right now, to determine whether your altcoins are going to keep flying or not. Honestly, I think I'm going to be staring at Ethereum with its Ethereum versus Bitcoin breakout like we saw at the very beginning of the video. I think we did that, right? Did I go to that? So Ethereum is in Ethereum versus Bitcoin. It looks like it's going to break out of this box. And it looks like it's going to come up to this next horizontal here. See that? So it's going to break out of there, probably give a test around here. And so it looks like it's going to lead this rally up. And altcoins often follow a bullish Ethereum. So I think, you know, to determine whether this is going to sustain itself, it might be all eyes on Ethereum. All right, so that's one way to get over. A second way to look out for sustainability is if price simply can get above the 4-hour 200 EMA, like with disregard to the yellow line, and come back down and stick its landing on it, not break down below when the 4-hour Stochs bottom out. So an if then scenario, if price can get above the, so actually I can take off the yellow line as well. So in this case, if price, and I'll have to put price back on. So now I'm just using price and 1 EMA. If price, let's see here, can get above the orange line and have Stochs, 4-hour Stochs, which sometimes takes 2 and 3 days to happen, right? So let's measure this from here to where it dipped. That's 5 days. So let me show you here. I'm going to circle down here what I'm showing you. And they didn't even bottom out technically, but this technically took 5 days. So this is not an immediate signal, but price got above the 2-hour 2-hour EMA on the 4-hour chart here. Stochs roughly bottomed out, curled back around. It stuck its landing on top of the 2-hour EMA, which automatically increased the chance that the rally will be sustained. But typically when that happens, the RSI will also have gotten into the green, right? So it's just a double confirmation for when it comes back down. If it can, so you see how price got above, kind of stuck its landing on top of this orange line. As the 4-hour Stochs came all the way down, that's what you're looking for. So that would lead us into next week. That is not going to be a signal that you're going to see over the weekend, but it's going to get, but the signal for the RSI would be something that happens more immediately. So that's why I'm showing you in these order. The RSI would hit the green first, and when things head back down, the strength of the bottoming out formation when the Stochs get close to the, so the Stochs, I prefer for a statistical edge that the Stochs come all the way back down and hit this white line, but sometimes they'll come down and into the neutral zone and turn back around. And if both things happen, RSI touch the green on the RSI chart, and Stochs can get kind of low-ish and turn back around with price staying above the orange line. So you can just put the 200 EMA on your 4-hour chart on Ethereum. So those are the two things that you're looking out for on the chart. Now, one thing to really look out for, though, that I'm really eyeballing on Bitcoin here is this. Let me take off my EMAs. Let's go to the 15-minute chart. Let's zoom in and expand this sucker. All right. Is this. So Bitcoin right now is in a downtrend on the 1-hour. Actually, no, it's in no trend on the 1-hour right now. It just, well, actually, no, it technically is. It hasn't even established a higher local high yet. So Bitcoin, in order to even get in an uptrend, I guess the 1-hour, it's in no trend. It's made a higher high on the 1 hour, but the 4 hour and the daily need to get back up, or the 4 hour needs to get back above here, then form a higher low, and then form and then form a higher low and turn back around until the 4 hour is in an uptrend. So right now the 4 hour chart is in a downtrend. You have lower lows and lower highs. So let's go to the 4 hour chart and get to a cleaner chart so you can see this. This is one concerning thing that could allow Bitcoin to pull down Ethereum in the event that you get the signals that I'm showing you. So those signals on Ethereum that I gave you, all eyes on Ethereum, yes, they have a very strong hit rate, but it is not 100%. So what would you look out for in Bitcoin in the event that Bitcoin's the one that drags it down, even though you got that statistical edge signal, is this. I'm trying to show you what would essentially, undo that, right? Undo your edge here. And you know exactly what to look for. It's going to be on the Bitcoin chart, right? Okay. So you have a lower high. So this 4 hour chart, a lower high, a low, a lower low. So now you have a lower high and a lower low. You are in a downtrend, right? Until a 4 hour closes both above here. That at that moment, then there's no trend on the 4 hour. It goes from a bearish trend to a neutral trend, right? At that moment, once it forms a higher low and ticks back up, then you're in an uptrend on the 4 hour chart. And that would give you, a pretty good edge on the whole market that was the ultimate low. But right now you're on a downtrend on the 4 hour chart and the 1 hour chart. So, I mean, the trend is down on the smaller time frames, not on the weekly. On the daily chart, you are in no trend. You technically you're not in a downtrend yet because we haven't formed a lower high, right? So if you do this and tick back down to the daily, that would be a downtrend on the daily. And so sometimes downtrends can work themselves out by forming a triangle, something like this, then busting out. It happens, but so right now on the daily, we have no trend. On the 4 hour, we have a downtrend, and on the 1 hour, we have no trend. So the trends need to essentially sort themselves out to all be bullish. But here's what you need to look out for specifically on Bitcoin. You have a pretty massive horizontal. So the reason I explained all that first is this. There's one specific line that Bitcoin has to get over and close candles over in order for those trends to go, from bearish trend to no trend, or from no trend to bullish trend. And it's going to be hard to get over. And if Bitcoin can't get it, then it's going to ruin the party on Ethereum, even if you get the signals. So I hope I'm making sense here. I think I'm doing this all in the right order. So here's that line. That line is roughly at 60,800. Let's call it, about 60,800. Okay. So this line is at 60. So that is the line that Bitcoin needs to go over to flip the trends on the small time frames. If you see price simply can't get over there and it heads back down like this, right? Maybe it forms a higher low, then tries again, but it might have a lot of trouble getting over there. So Bitcoin price action around 60,800 is the line you're going to be looking for. And if you see Bitcoin get rejected and come back below 58,800, then that will almost definitely, especially with even just a 1 hour closure, a 1 hour candle closure above here. So here's specifically what to look out for. 1 hour chart on Bitcoin, draw in your 60,800 line. Okay. Draw that in, draw in your 58.8 line. All right. So 1 hour chart, if it comes up here, tries to form a lower high, but closes a 1 hour candle, that automatically increases the chance, even if Ethereum does what I said, right, and gives that bullish signal, that Bitcoin signal would likely undo or have the power to make it so that it's one of the odd moments that Ethereum gives the signal but fails. That's specifically what you're looking for. All right, I hope I'm being clear with what I'm stating here. Does that make sense? All right. Hey, so if you want to learn a very simple trick on how to make more money in trading, right? Just a super simple video to watch. You're going to want to click this video that's popping up here. And for new viewers who are new to my channel, if you want to make more money in crypto to understand price better, you're going to want to watch this video here. Make sure before you go, you hit subscribe, hit the bell, and y'all just got timified.